Hey guys, how's it going? Welcome to the London session recap for Tuesday the 8th of March 2022. So quite a volatile morning, morning, afternoon, evening, wherever you are in the world. Volatile London session would be a more accurate statement. Continuing with the overall market volatility we are seeing with the ongoing Russia and Ukraine situation. But from a technical perspective, we're obviously very, very heavily bearish. Just a super quick look at the higher time frames. Weekly, we are in this extreme demand zone, so I would expect at a minimum, probably we're going to see a bit of a bounce. I mean, we don't have to. We could literally just pause here and dump through, right? Who knows? But we have a decent edge that we know we can probably expect a little bit of a reaction, as a minimum from this sort of extreme weekly demand zone. We're also tapping into this extreme daily zone as well, right? Nested within that weekly zone, where we're already starting to see a bit of a daily reaction, right? So it remains to be seen whether that's all we're going to get and then follow through, or we're actually going to see a bit more of a sustained daily pullback. So keep it very simple, let the lower time frames guide us, right? Whether or not that's going to happen. At a bare minimum, if we're going to kind of be forecasting a daily pullback, generally, obviously we would wait for a daily chock, but the daily chock line is quite far away. So kind of just at a minimum, before I really start thinking we're going to see a sustained pullback, I want to see really this 4-hour supply zone start to fail, because we did have a 4-hour chock, which I'll dive into in a minute, because I know that caused a little bit of confusion. But I think if we can start to clear this, immediate or nearest 4-hour supply zone, right, then I can start to think we're going to see potentially a bit of a deeper pullback. So the 4-hour chock, let's just try and clear this up once and for all. Okay, so let's zoom right into this. So at this point here, the active internal high and low on the 4-hour chart is going to be, I really hate trading at the moment. I'm having such a love-hate relationship with it, but essentially if we can get these lines to work properly, hopefully you can see that a bit clearer. At this point, the active 4-hour the active 4-hour internal high and low would be here and here. Okay, why? Well, that's the last pullback, and then that's one straight movement down. Okay, so that's the low and this is the high, right, at this point. Now the next 4-hour candle I'm going to play in a second. The way that this candle prints, right, is that price first breaks this low. Okay, so the moment that price breaks it, right, regardless of whether the candle was finished printing or whatever, because remember, for internal price action, we only look at wick breaks. So the very, very moment that you see price trade below this wick, right, that low is then broken, and then this will become the active internal 4-hour high at that point. So the moment this low goes, we would then shift this line down to here. However, in this very same 4-hour candle that we're going to look at in a minute, it also then, after breaking the low, then goes back upwards and then moves up here. So in one movement, in one 4-hour candle, which we're about to see, it takes the low, which then means that this then becomes the new high, right? So it moves from here down to here, and then the same candle then breaks this high. So that's why we get a 4-hour bullish chock. It can be a little bit easier to see, well, two ways. One, in a live market, because you watch it happen live. You're watching price come down and then you watch it go up, so you know what happens and you can mark it out, right? It takes 4 hours to happen, so it's quite slow. Or if you're looking at it, after it's already happened, you can look on the lower time frames, the 1 hour, the M15, whatever, and you can look at the order in which things happen, whether it does that or whether it goes up and then it goes down. Because if it goes up and then it goes down, there's been no bullish chock. It's just, that's the break of the low. This would then become the new low, and that would be the high, right? And it's continued the overall bearish movement. Okay, so I go into this in depth, I think, in the complex internal structure video, where we talk about this. But in this case, it takes the low first, which means this then becomes the high, and then it takes the high, right? Okay, hopefully I've made that as clear as possible. So let's play this forward by one candle, and you can kind of see that happen. So yeah, it's hard to see when you do bar replay, but you can go and check on the lower time frames, right? Because if I go check on the M15 now, right, you can see, oh yeah, it's very, very clear. We clearly went down and then we went up. So yeah, that's what happened, right? And we had a 4-hour bullish chock. So that's where the chock line is. So then at this point, this is the active internal high, this is the active internal low. Next candle, it continues up higher, right? So then this becomes the active internal high, etc., etc. But this is where the chock was, right? So it is messy, it's not the cleanest, but we now have technically had that 4-hour bullish chock. So from our structure perspective, we can expect a 4-hour pullback. So that's definitely one bullish sign, but I'd really like to see at least this supply zone here fails for our supply zone. If we can break that, then I think we'll see a much clearer sustained pullback. But that is what I'm anticipating anyway, because we're coming off 4-hour daily, weekly demand. We're extremely overextended. We've had that bullish chock. This supply, we've already had a mitigation. We've clearly failed to put in a lower low so far. Of course, that could happen, but I think on the balance of probabilities, we're probably going to chop around in here. Maybe we'll mitigate something within this wick, right? And then I think we'll get that pullback. But we don't have to. We could continue bearish. So let's see what happens. So that's the 4-hour chart. Pretty messy as things stand. So let's take a look at the 15-minute chart and see how that developed coming into London. So as you guys would have seen in my markup, the only zones I believe I marked on was this supply zone, this demand zone, and this demand zone. Okay, so I didn't mark up anything that was going on in the middle at that point. But let me just take one step back before that and just talk about structure. So M15 structure, as you guys know, I'm using a little bit of discretion at the moment with the uptick in volatility, and I'm only focusing on those larger swings, right? So we have nice, beautiful large swings to focus on at the moment. For instance, I didn't classify that as enough as a swing pullback, right? Just looking at these nice big swings here. You can use, I believe, the 30 pip rule I said, if that helps you, right? And then that would be our break of structure here. So for me, just focusing on the clear swings, so the M15 had to switch bullish, right? So now we can look for those pro M15 trend longs, and continue the movement to try and play the 4-hour pullback. The only caveat to that, right, is what I was saying is potentially the M15 only switched bullish over here, where we got that initial bullish break of structure, just to mitigate 4-hour supply, right? Because at that point, again, if we go back to the 4H, potentially the M15 only switched bullish, literally just to pull back up, mitigate this, and then it could have continued down and switched bearish again on the M15, right? However, remember that rule we say, if the M15 switches trend and we also get a bullish chock, which we actually did, right? That's not the chock line that happened here. Then usually that's a good sign that the M15 is going to stay bullish for a while, and we are going to get that 4-hour pullback. So this is one of those cases in which it increases the probability that the M15 will stay bullish. Okay. So yeah, but it's just something you have to have aware in the back of your mind. So coming into London, price was around here, and really I was just viewing this as kind of a choppy range in the middle of the range, right, around the EQ. I was focusing on price either coming down to this demand or this demand down here. While we also have this supply. So obviously selling from this supply would be counter to the M15 trend, which isn't ideal, right? Ideally we want to concentrate on pro M15 trend moves. But it's with the 4-hour trend, it's with the daily trend, it's with the overall bigger picture, higher time frame bearish momentum. We also have the supply chain as well, right? The continuation of this, it's the top of the range. So if we're in that range bound environment where it's going to be a little bit indecisive, right? This is where I usually say stay out the middle, and you want to stick to the extremes. Look for shorts up here and look for longs from down here, right? Cool, and that's exactly the way in which I was approaching it. However, as London or Frankfurt and London session starts to kick in, right? And then you see a move like this start to occur, that's when you can start to react and adapt to what price action is showing you, okay? You don't have to do this because it's still not ideal trading from within the middle, but you can, right? So when you see the M15 volume come in, right, we break this, this sort of minor internal high here. It's not the true chock level, but it is a high nonetheless. It breaks that, it gives us some M15 demand to work within, right? Then you can follow that momentum, the session open volume, and then you can look to trade in line with it. It's pro M15 trend, etc., right? And that's the move. I didn't catch the move, but that was a really clean entry. I'll explain it a little bit on the M1, but I just wanted to explain why I wouldn't really be that bothered about this price action, because if we actually look at the movements, when we came up here, we then had a bearish M15 chock. So we had one movement down, then we pulled back, then we had a movement down, right? Then we had a bullish chock. So hang on, let me draw it more accurately. So we had a down movement, we had an up movement, we had a down movement, right? Then we had a bullish chock here where we took that high, right? And then we had a bearish chock there, so that was the bullish chock, that's the bearish chock, okay, so then we're bearish again, and then that was one straight movement down. So if you're technically looking at the internal structure, it was trading between here and here. So that's another reason why I wasn't in love with any of this, okay? But again, this is where it's a little bit more advanced, it's a little bit more nuanced, but when you see that volume kicking in and then it gives you an M15 demand, you can kind of paint a little bit of demand chain here. We can see that this level swept these lows, it's pro M15 trend, it's in the discount, right, it's below the EQ, you're playing the session open, right, boom, that trade makes sense, okay? It's not the best in the world, but it's definitely one that is valid and definitely meets my plan. I just had a few hesitations and doubts about it. One, all the reasons I just explained about the M15 internal structure, I wasn't, absolutely in love with it. Two, when this initial movement did go up, it kind of failed to break this high here. So then I was cautious of it. Came, maybe it's just getting stuck in the middle of this range. I'm forcing it a little bit, right? Because we had this M15 supply here, and it very easily could have just been, this supply chain holding as well, and we're kind of just getting caught in between it. So when it made that movement up, I was a little bit hesitant about getting long within here. And then if we look at the M1 as well, it was one big straight push, okay? So one big straight movement up like that, no inducement in the leg, right? Typically we want to see that. And yeah, so that was kind of basically the two main reasons why I didn't take this trade. One was a straight push, so I saw this potentially that this low was going to get swept, and two, the way prices move up and then kind of came back down with a lot of momentum. It failed to kind of break what might have been this sort of messy supply chain range, and I just didn't really like it. So what I was waiting for, because it was still decent enough, I wanted to wait for an M1 confirmation entry within here, right, which we didn't get. But also just taking a few steps back on the M1 price action before that, which I did like when I started to build the story, right? We came off this M1 extreme demand that had swept that M15 low, right? Swept this M15 low down here. Price had come in and mitigated that. Had then given a bit of change of character, mitigated this demand, and then it obviously flipped this supply zone here, okay? So now, as price is coming back down into here, and you're looking at this level of demand, you can paint the story where it's a flip zone, right? Because it flipped the supply. It was where the last M1 mitigation was, right? Following the demand. So you have a demand chain, mitigation 1, mitigation 2. So this makes sense, right? You have a series of demand zones that are being respected. So I liked all of that. That's what I really liked about this. But the two main reasons, like I said, I didn't want to take it with just setting a limit here, was no inducement. It wasn't really a super clear sweep zone. Arguably it swept this low here, right? But more importantly, the big one for me was the way it kind of rejected the top of that M15 supply zone and came straight back down. So yeah, I was waiting for an M1 CE, but as we can see, right, essentially waiting for that pro trend of the internal chock, right? We'd have to wait for that high to go, and then it never came back. So the other way you could go into this, if you looked at the seconds. So seconds is obviously something I used to use a fair bit. I do cover this a little bit in the course. It's all the same though, right? Price is fractal. You just apply what we know on a higher time frame to a lower time frame. I'm just hesitant to talk about it, a lot more recently, because I think the majority of you, until you're consistent on the M1, you don't really want to be getting in the seconds, because it can get you into, a lot more false trades, right? It's obviously a little bit harder to trade, but here, may as well show it because this is a really good example of it, where you have 15-second liquidation, right? You then have that pullback, you come down into the M1 zone, so then you're looking for the 15-second CE, so you wait for the chock, right? That would be the chock. That gives you the chock, boom, come back into your M15 inside bar demand zone, and then that's your 15-second confirmation entry of the M1 level, right? And that's basically the perfect way to trade or use the 15-second for extra confirmation of M1 level, just when you want that little bit of extra icing on the cake. So yeah, I didn't take that trade. Well done to many of you who caught it. I got quite a few DMs with it being your biggest and quickest ever trade. So well done. There's plenty of logic behind it. I still think it's a good trade. I'm just explaining the reasons why in the moment I hesitated a little bit. So I wanted a bit more confirmation, waited for the M1C, and then obviously it absolutely flew. There was some fundamental news that came out regarding essentially the ECB announcing that they're having this massive bond auction to raise money for defense spending and all the stuff with the ongoing situation, right, etc. It was a bit bullish for the euro, so that's why we saw that massive move. So yeah, overall, hopefully you guys can make sense of why this isn't the greatest range in and of itself, but when you see that London session momentum kicking in, or even Frankfurt coming into London, you then have a clear M15 demand zone, paint the story a little bit, right, potential demand chain forming, this liquidity, etc. It's pro M15 trend, it's within the discount, there's a lot of logic behind it, but the two reasons I didn't like it was, one, potentially it was, we were holding onto this here, we were coming down with a lot more momentum. I thought we might run this, sweep this, and then potentially, give an M1 entry like that, and I would have much preferred that, but we just think in the end, it is what it is, ends up being a beautiful trade, okay? Cool. So then we come up into the M15 supply zone. Yes, this is technically a weak M15 swing high. Why is it weak? Well, it failed to do its job. It failed to form an M15 swing low so far. So that's why we expect it to be weak. So can you trade from these M15 supply zones? Yes, clearly, right? They can hold a lot of the times. Also, what else is in favor of shorts? It's pro 4 hour, pro daily trend, right? You know, if we zoom out, I think this kind of paints the picture for itself, right? It's heavily bearish. It's also part of the supply chain, right? Nice sweep of liquidity. You know, when you have one big straight push up as well, a lot of times price can come back in, right? So yeah, it's riskier, but definitely, you know, especially if you're getting in with 2, 3, 5 pip stops, and the next nearest M15 demand zone as well is 30 to 35 pips away, right? Risk to reward can be worth it. It's just down to you. Against a lot of that momentum, you know, yeah, probably, well, I was really waiting for an M15 bearish chock initially. That's what I would have preferred to have seen. And then look for that. That's definitely not more confidence. However, the M1 was setting up pretty clean. So let's have a look at that. And I'll kind of show you my exact thought process on this because as you can see, there's a little bit of a debate and confusion around this in the Discord. So let's do it by bar replay because it's probably going to be the easiest way to explain this. And I'll delete all of the lines and let's kind of go through it slowly. So we had a really nice refined M1 supply zone here as well, which may as well scroll back and have a look at, which was this initial flip from yesterday, right? So we do have an unmitigated extreme, but we also have this zone as well. So price obviously comes into there, and then we can, I mean, even from here, right? Even if you don't even have a refined M1 zone and you're just waiting for, you know, the M1 entry model within the M15 supply zone, right? At this point, where is the choke line on the M1 that you'd be waiting for to go, right? Because this is another, let me just check this, that's the pullback. Yeah, so this would be our M1 choke line. Yes, the question I get a lot is, you know, does it matter what order the flip or the choke happens in? No, it does not. But the key thing is that I need to see a choke on the time frame that I am entering on before I can enter. So regardless of if the flip happens before the choke or if it happens after, it doesn't matter. It's just that I can't get into a trade until the choke has happened. Okay, so let's go through it and then hopefully make a bit more sense. So then we pull back, right? So waiting for a choke, can't do anything until there's a choke. We've pulled back and now taken the high, which now means this is the choke line here, okay? Cool, so need to wait for that level to go, right? Can't do anything until then. So it still hasn't gone. Okay, now we have a choke. Okay, so if let's say, right, just ignoring everything else, let's just say you pure M1 entry model, you want to get short, you like everything else, where can you enter? Well, this one's a little bit a bit debatable on whether or not this is a true M1 flip. So let's ignore the flip and keep it simple for now. Can you enter on a supply zone? Well, yeah, we have this M1 supply zone that led to a choke, right? So that's your valid zone. Okay, so yes, you can enter on that, and I believe the zone plays out. It just depends on how big of a stop you want, etc., where you want to enter, whether or not you would have been tagged in. But this in and of itself is a valid M1 choke from an M15 supply zone. So if that meets your plan, yes, you can short. If you want to flip, what do we need? Well, we need it to have flipped demand, okay? So where is the demand? Well, some people were drawing on this as M1 demand, right? That price came into it, reacted, failed to put in a higher high, right? And then we closed below the reaction line, this being the failed reaction. So that would be a flip. I don't really like this, and the reason why is because whether or not you classify this as M1 demand, because if we bring it back to where it would be demand, which would be at this point here, right? I mean, at a bare minimum, what does the demand zone have to be? It has to be a bearish candle that's engulfed by a bullish candle. So at this point here, it is demand. And then it does lead to an IBOS right here. So technically that is an IBOS. So yeah, on those grounds, you know, I guess it is a demand zone, right? It leads to some form of breaker structure. So yeah, technically it's demand zone. So then when price comes back into it, right? Does it do its job? No, it never breaks the high and never get a closure below. So yeah, technically that actually is a flip. I just didn't particularly like it because ideally I would have liked to have seen price break and close above. This is something I'm kind of just, I guess, brain dumping on you guys, and I'm trying to figure out as well, because I don't have a really solid answer for this, because I guess based on my rules, you know, technically it is a demand zone because it did lead to some form of breaker structure. It did lead to an internal breaker structure here. I just typically prefer to see like a nice candle closure, so that's a bit stronger. Then you see price come in and then it flips it. But yeah, based on all of this, you know, if I'm thinking really mechanical and keep it simple, that is a valid demand zone. Price reacted, it failed to put in a higher high. It then broke and closed below the reaction, and we got a chock. So yeah, technically anywhere from the base of the reaction to the top of the reaction there, boom, that is your flip zone. Okay, so then that would be valid to get in short within here, right? And then that can be your entry. The way I was looking at it is I wanted to kind of see this held, because obviously there was no bearish M15 chock at this point. There was a lot of momentum. We're trading from a weak high that's counter to the M15 trend. So typically what I like to see, if I'm not sure about it, right, is that first level of respect. So if I want to say take an M1 entry without waiting for an M15 chock, because at this point for the M15 chock to be, it was going to be all the way down here, right? So as this supply zone starts to hold, where can we look for the next level to get in? Well, we have this demand zone here, right? So what you want to see is this supply zone hold, and then you want to see this demand zone fed as well. So we're reacting from demand. It's that battle between supply and demand at this point, right? So for me, for there to be a failed reaction, I need to see a candle closure below the reaction line, right? So this being the reaction line, whoops, here. Right, there's been no candle closure below. So I did say in the course, right, you can, it's up to you whether you want to have it as a wick or a candle closure. I personally now will always use a candle closure. And my advice to 99.9% of you would be to always wait for a candle closure, because it's a much stronger signal. So for those of you who see that as a fair reaction, then yes, you could look to get short in here now from this level here. For me, that's not valid, okay? I want to see a candle closure below the reaction, because I've seen plenty of times where this happens, right? It might wick it, but because there hasn't been a closure below, and it ends up playing out, and then you can take a loss. So that's why I want to see a bit more, okay? So now at this point, we have the candle closure below. Yes, there could still be some orders within here, right? That could be filled and it could go. But once you see that failed reaction, I'm happy to then look for the short. So paint the story. We've had that initial level of respect from the supply zone, right? We've then had this demand have a failed reaction. So where am I going to enter, right? Well, the whole, the way when you take the actual flip is you take it from the base of the reaction to the top of the reaction. So you can enter anywhere within this box, but I'd like to clean it up a little bit. It's quite a large box, right? So you can clearly see that this candle has already been mitigated, right? This above it's been mitigated. So if you follow the supply chain, the next logical area is this inside bar, right? And you can include that wick as well. It's typically what I'll do, right? And then that's the level. And then I was looking to set an entry short in here. Price was really volatile at this point. I was considering more of a 3 pip stop as the volatility had picked up. And then before I even set my order, it did that. So I didn't even bother at this point then, because price just started to melt away. But I just wanted to kind of talk through the way I saw that. I know some of you viewed this bit here as a valid flip. For me, no, I need to see a candle closure below the reaction. The only way in which I could justify getting short from this zone here would be that it caused an internal break of structure, right? Because obviously after this chock, the internal price action is then bearish on the M1. So we've come down, we've pulled up, and we did wick the low. So technically that is another IBOS because we only needed a wick break. So then you could have shorted on here. But for me, it's reacting from demand. I want to see this demand flip really. Once we've got the candle closure below, that for me is a lot more high probability now to play counter to the M15 trend from a weak M15 high without that bearish M15 chock. This is kind of the amount of confidence I like to see, right? We're starting to see the M1 supply hold. We've had 2 failed reactions. Boom, now I want to get in, but obviously as it started to tank, it made a distance away, not really interested at this point. And then if we play price forward, we can see that, well, I don't even know where we got to now. So then this is, so this is when we're coming into M15 demand, but we're back in the middle of the range. The top of the supply is held, and what I say about ranges, really we want to be sticking to the extremes. These are the highest probable areas. However, demand chain starting to form, so we could see a decent level from here. But coming into this M1 zone, is this a level on which I'm going to want to set an entry order on? No. Why? Similar reasons to the one from sort of Frankfurt pre-London. Quite a straight push. I mean, this one's a little bit better, right? Because it's following the demand chain as well. So it's kind of the last point of demand that needs to hold if this is going to stay bullish. Whereas this has an unmitigated extreme below, so it could easily be inducement for below. The only thing it does have going in its favor is it did sweep. And it is technically a flip zone as well, right? But for me, because it's one big straight push, these often fail. So look for an M1 confirmation entry as it gets into here, but the M1 chock was all the way up here, right? So I'm not liking it, and by the time it gets all the way up here, session's over at this point. I'm no longer interested. It becomes a lot lower probability. And also where you're going to enter, because this is kind of all quite corrective. Then the momentum comes in, So, you know, following the series of mitigations, this zone would make sense. But yeah, I just, you know, it's messy. It doesn't look like our textbook entry model, right? Not really one that I'm that keen on, especially as the session is over. So what would I be looking at? Potentially this level here, see how it comes into sort of around New York. Yeah, be happy to kind of look for an entry within here, but I wouldn't be surprised with all of this excuse me, sitting liquidity that we may come lower into one of these two zones. But following the demand chain, right, I think there's more than a decent edge to be looking from within here, especially as we haven't had a bearish M15 shock, you know, whether or not you want to accept the risk that we could be coming lower to these prices, especially after, you know, rejecting the supply chain. But for me, it looks good so far. Have we broken that low? Let's see, what's the low of that? I'm looking at the wrong one. The low of this candle is 65.7, low of that is 65.6. Yeah, technically we have now had an M1 sweep. So just drawing us on, we've now had a bullish change character, and we have now had a flip. So you could be looking at that. It's out of session for me, so yeah, I'm happy to leave that alone, but that would be yeah, a valid trade. We've got the flip here. But yeah, price is just pretty volatile at the moment, so I'm going to be waiting until near New York. I'm not sure don't think I'm going to be trading in New York today anyway, but yeah, I'm definitely staying out of these trades that are out of session for me at the moment. So that's the way I viewed and interpreted price actions today. Yeah, a lot of opportunity, but yeah, hopefully I made it clear as to why I didn't initially like this trade. But yeah, beautiful risk reward for those of you who did catch that. So yeah, see you guys in the next one, and I hope you have a good day. Cheers, guys.